Good afternoon, ladies and gentlemen. I'm Soumya, moderator for the conference call. Welcome to Paisa Capital Limited Q3 FY2024 earnings conference call. We have with us today Mr. Narayan Gangadhar, MD and CEO of Paisa Capital Limited, and Mr. Gaurav Munjal, Whole-time Director and CFO, Paisa Capital Limited. As a reminder, all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note this conference is recorded. I would now like to hand over the floor to Mr. Narayan Gangadhar, MD and CEO of Paisa Capital Limited. Thank you, and over to you, sir.
Hello, everyone. Good afternoon and welcome to our Q3 FY24 earnings call. On this call, I'm joined with Mr. Gaurav Munjal, our Chief Financial Officer. Q3 has been a great quarter for investors and the broking industry. Nifty touched an all-time high, and the overall industry saw an addition of more than 96 lakh demat accounts. The total demat accounts of the country stood at 13.93 CR. In Q3 FY24, we acquired 2.3 lakh customers, reflecting a 71% growth quarter on quarter, and our total customer base has reached 39.6 lakhs. Further, our market share in incremental client acquisition has grown from 1.3% in Q2 FY24 to 2.4% in Q3 FY24. During the past quarter, our total average daily turnover grew to 3.7 trillion rupees, an 80% year-over-year growth. Our average client funding book stood at 317 crore, a growth of 18% quarter-on-quarter, and the mutual fund AUM reached 801 crore, a 20% quarter-on-quarter growth. We are happy to report that we have achieved our lifetime highest revenue in Q3 FY24 of rupees 100.3 crore, and our profit after tax stood at 15 crore, a growth of 37% year-on-year. Further, we have ended 9 months FY24 with a revenue of rupees 281 crore, and our PAT stood at 48.6 crore, a growth of approximately 68% year-over-year. This quarter has been a marquee quarter for our product. In the last earnings call, I had outlined that we have undertaken a major initiative to overhaul our product and tech platform. And I'm happy to report that we have taken significant steps in that direction. We have rebuilt and launched our entire product onboarding journey, placing a strong emphasis on UI and UX. We have introduced industry-first features such as reverse penny drop, account aggregator integrations, and API optimizations to significantly speed up the onboarding process. We enhanced the option chain by introducing support for various indices such as Sensex, Mid-Cap Nifty, and Fin Nifty alongside Nifty and Bank Nifty. We introduced bulk order modifications, a game-changing feature which allows users to edit multiple orders simultaneously. This is a game changer for high-volume traders, marking an industry-first launch. We also optimized our option chain journeys to support straddle and bulk orders, allowing users to place multiple orders effortlessly with a single click directly from the option chain. Last quarter, we had also discussed various initiatives which we have undertaken to overhaul our MarTech stack. This is critical to help us scale and acquire more customers digitally. This quarter, we successfully implemented an omni-channel communication strategy, tailoring interactions to users and preferred channels. We curated the client communication plan that included best practices in terms of content, channel, and trigger time. Reducing the lead churn from 30 days to 7 days to connect with users very early in their onboarding journey has led to better conversions. We have been actively focusing on scale while optimizing on lower funnel events such as buy-sell trades in F&O, cash, commodity segments. More such initiatives are underway as we build in the best-in-class digital engine to to acquire customers at scale. As we discussed in the last quarter, we expect these initiatives to land in the coming quarter and also in the next quarter. Finally, I want to end the call with restating that we are a technology-first company. We are going to continue investing in new technologies, especially in security, AI, and data science, and build fresh product capabilities to further scale our digital-enabled revenue pipeline. We will continue to invest in MarTech and augment our customer acquisition in coming quarters to set the stage for future growth. With this, we would like to open the meeting to any questions from the audience. Thank you very much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Our first question comes from the line Devrat Himat Singha from Augmenta. Please go ahead.
Hi, sir. Very refreshing to see, a good set of numbers. I just wanted to, I was not able to understand the ESOP bit and how, you are continuously issuing new ESOPs and taking approvals for that. So can you give us some guidance on what that looks like and what kind of expenses, can be incurred because of that going forward? That would be very helpful. And so after you answer this, I'll just come to my next one.
So right now, our ESOP is, we had get it approved from the shareholders, and the same has not been granted to the seniors as of now. But currently, it is in the range of, 60 to 80 lakh in a quarter, which going forward, which may increase going forward, and because once it is granted, only then we can take into the finance and account.
Okay, so what kind of impact could we see this having on the employee costs, like overall, if you can, shed some light out there?
So that depends upon the numbers and the people who are going to be joined in future. So once it is granted, but yes, we need to follow that, that India's and all. But generally, in that case, major of the costing comes in first year, and then it's reduced in second and third year.
Okay. Thank you, sir. And sir, one other question I have is that, we are planning to move from T+1 to T+0, say by March, April. Do you think it can be seamlessly implemented, and do you think this would increase volume significantly going forward?
So, first of all, I think, it can be seamlessly implemented, but I don't see it impacting the volume. If anything, it impacts more. It does introduce slightly more liquidity in the market, but the measured impact is not really going to be that significantly high. But I do believe this is a good step forward in terms of clean governance.
Oh, right, sir. Absolutely. And just one last question, sorry. How much free cash do you have on your balance sheet?
So it would be approximately 70 to 80 crores right now.
70 to 80 crores?
Yeah.
Okay. Thank you so much, sir. If I have any questions, I'll come back in line. Thank you.
Yep.
Thank you. Next question comes from Krishna Prasad, an individual investor. Please go ahead.
Hello. Hi, sir. Am I audible?
Yeah. Yes, you are.
Yeah. Hi, sir. Yeah. Hi, sir. Good afternoon. Congratulations for good set of numbers. Sir, I want to know that your market share has reduced in this quarter. So any reason, sir?
What has reduced?
Market share.
Yeah. So over the past, if you look back at the history of 5paisa, going back through the start of the year, right? From June of last year, we actively were in a phase where we wanted to improve our digital efficiency. So as a result of which, we really, the focus was on, was on essentially achieving more profitability and getting the system to a state where we can again get back to scale. So as a result of which, our goal was really not to acquire customers. See, it's very easy to throw money and get customers in the market. Everybody is doing it. There's no rocket science. We believe that's not a strategy we want to pursue just yet. As a result of which, after I joined, we made an active decision to actually decelerate growth. So whatever you see is completely planned. And I expect the market share to stabilize only in a few quarters, because it doesn't make sense to continue spending money when we are not able to get the ROI we want. So right now, the growth that I'm reporting, that is coming at the right level of unit economics which we can support. So the key is going to be to scale that. And that's the reason why you see a deceleration. And you will expect to see this next quarter as well before we stabilize.
Okay, sir. So, sir, so in the medium, I'm sorry for that.
No problem.
Yeah. So in the next 8 months or next year, so do you have any target in terms of OPM at operating margin at 30% in that manner? So any guidance on that?
See, we don't give any guidance on that. But this year, as I said, in the previous earnings call, this year and the subsequent quarters to come are going to be all about scaling and growth. So there will obviously be new costs. There will be costs in terms of client acquisition. There will be costs in terms of ESOPs. There will be, those kind of expenses, which lot of which will be one time in just getting the process and the build up to scale. So I would say that, as of now, we don't give any particular guideline, but we will obviously be within the same range as we have always been historically. I don't see that changing per se.
Okay, sir. Thanks so much and all the best for your future, sir.
Thank you.
Thank you. Our next question comes from Mitesh Kamdar from Aditya Equity Investment. Please go ahead.
Hello. I had the question regarding the other expenses. There is a marked increase in other expenses this quarter. Any reason for the same?
There is a
marked increase in other expenses this quarter.
So actually, as you see that other advertisement cost is a part of other expenditure, and our acquisition, has grown up from 1.35 lakh to 2.32 lakh. So yes, it is in the line of the acquisition.
Okay, fine. Thank you.
Thank you. Our next question comes from Deepak Poddar from Sapphire Capital. Please go ahead.
Hello, am I audible, sir?
Yes.
Yep. Thank you. First, thank you very much for this opportunity. So I'm a little confused. I mean, in the sense, now you spoke about that we had planned to decelerate the market share, and at the same time, our other expenses and advertisement cost is increasing, and our the number of client addition is also increasing. So I'm not able to understand. I mean, at one time we are planning to decelerate market share, and at the other time our cost is increasing, and even our gross addition in clients is also higher. So where is this mismatch we are talking about?
Yeah. So see, the gross are only increasing in this quarter. Okay. So the decision to decelerate, it was taken around in June of last year. So it's been going on for the last 2 quarters, and only now we have decided to accelerate again. So the cost increase you're seeing is from there. Now, because of this, what has happened is because the reason we decelerated, it's very important to remember this, is that the reason for deceleration is because we wanted to improve our digital acquisition engine. We wanted to build the product journeys, and we wanted to get that right. So we made that is the conscious call, So now we are at a point where we believe that in a quarter or so, we will be ready to ramp up the engine and scale it further. And this quarter onwards, we have just started that work. That's why you see the cost going up. And that's how you see the acquisition numbers where they are today.
Okay. So you do expect your market share, which has declined from 3.2 to 2.8% in this quarter, to further decline in the fourth quarter, right?
Yes, I do.
Right. And from first quarter, you expect, to see the upward trajectory in terms of your market share.
Yes, and see, I also want to add one more point, right? If you look at most businesses which are like ours, right, you will see that generally when the deceleration happens, you grow only at the rate at which you incrementally acquire customers. This is the rule of thumb. So if you take any leading players, generally you will grow only at that rate because no one has a secret sauce to acquire better customers than anybody else, whether it is us or the next two players above us. There is absolutely no differentiation in the acquisition engine whatsoever. So whether you see 10 lakh acquisitions per month, 30 lakh or even 1 crore acquisitions per month, the reality is it's ultimately just a financial game and nothing else more than that. Now the key is to play that, we have to get digitally highly efficient because the differentiator is who has a better engine, not who can invest more capital. So the way we are approaching it is that because for 5paisa, for many years, we really never invested in technology. We never really invested as much as we wanted. We always are a technology company, but we never really, it was not so much of a priority. So it was always, the engine was not built to scale. But in these last 6 months, we have put a lot of effort in getting the engine back up where we believe now, in a quarter or so, we will increase. So the deceleration is happening because of clients which have been acquired in the last quarter and the quarters before. Anybody who we have acquired now, we are seeing excellent performance from them. And we will see their impact only in the coming quarters because generally it takes the client a quarter or two to get settled in, just to learn the system, to get acclimatized and, they look for the right opportunity. So there is a cool-off period. And that's why I'm saying that the market share will dip before it corrects again,
Okay. But I understood that point. But I think in the last call, we were of the view that we are looking to double our market share in 1 year, and accordingly our revenue growth will also likely to follow. May not have 1:1 kind of a correlation, but maybe 1:0.5 kind of a correlation, or 0.5, 0.7. So is there any change in the view on that front, and how do we see that going forward?
No, there is no change in the view. It's just that for accelerating at that pace, we can only make that call quarter over quarter. There are some quarters where we want to launch something, then there are some quarters where we want to defer it. So we are not time boxing ourselves in the sense that if it makes no business sense, we are not going to spend the money. It's as simple as that. Even if it means we have to stay away from the market. So right now the market is hot. Everybody is acquiring a lot of customers. If you look at the top 3, the numbers they have reported, it's through the roof, right? But we believe it's not the right time to enter the market. So for us, the game plan is we want to wait and watch, and also we want to get our technology systems in order. So what you will see though is you will see a systematic increase in our acquisition plan, and we will definitely have a roadmap to end the year, that is next financial year, at the numbers we talked about.
FY25 end, we are looking at what, 5 to 6% kind of a market share. Would that be a fair assumption?
I don't want to put any number to it, but it will definitely be 2x what we have today. The number is, again, it depends on the quality of customers also that we acquire.
Okay. And accordingly,
you can give away free ETFs and get 5% like some other competitors have done. We can run incentives and get, there are other security companies which have reached 6-7% market share, but that's not meaningful because it doesn't result in any impact to bottom line. So it has to be 5% with the right kind of profitability and other metrics. So please remember that, right?
Fair enough. Correct. And revenue growth should follow, right? With some lag.
Yes, exactly. And that is what you're seeing in this quarter as well, right? You will see this kind of trajectory. Yes.
So what sort of correlation we are looking at? Would it be 0.5 or 1:1 correlation? Can it be possible, in terms of market share and your revenue?
No, those kind of correlations cannot be had in this industry. It's too immature to have that kind of. You can get that at a Hindustan Unilever, not here.
Okay.
Where the market is very new.
Fair enough. And your other expenses, I think, can you give the breakup of your fixed cost and the client acquisition cost out of this, I think, 50 odd crores you have spent?
Actually, approximately 45 to 50% is related to the advertisement and the customer acquisition basically, and approximately 30 to 35% is our IT cost, and rest is the other business cost. This is the major.
So 45 to 50% is your client acquisition cost, right?
Yes, this includes everything.
Okay. And just my last query, in terms of your margin, you do expect to have some softness in your margin, largely driven by the cost that is expected to come on account of your effort to scale up the business, right? And on the investment that we are looking to do in the tech side.
Correct. That is correct. Yes.
Okay. But is there any rough range that this is the, minimum threshold that we do expect that it should not go below that level? Either it's 25%, whatever. In threshold, minimum threshold.
No, we are a growth company, so there is no such range per se. Some quarters it can be high, some quarters it will be low. There's no such normalizations that we work for. We work for certain level of unit economics and certain high level operating margins. Everything else is, I think, more sensitive information which we don't disclose in the call.
Okay. Fair enough. I think that's it from my side. All the way best to you. Thank you so much.
Thank you. Our next question comes from Vivek Joshi from Free Turns. Please go ahead.
Yeah, so good afternoon and heartiest congratulations for achieving the milestone of 100 crores on the revenue side. So, sir, I was just going through the data for Jan 22 and Jan 23. So the number of active clients which we have at 5 Paisa is reduced from something 12 lakh to 5 lakh, and our market share has also fallen, and from 6th largest broker to, I think we are right now at 12th largest broker. So where do we see, sir, this degrowth stopping and the growth picking up?
Yeah. See, that is why the company pivoted. I joined the company in Q1, end of Q1 last year, and the main reason was to repivot and rechange this curve, right? So obviously, as I mentioned, that a lot of the deceleration that you see is very much in line with the strategy that was planned. And what I see is that over the coming quarters, I do see the trends changing, and I do see these numbers coming back to those levels. But it will take us a little bit of time as we figure out what is the right game plan to both launch our new products which we are working on, as well as also build and scale the new technology stacks as well as the MarTech stack that we are continuing to build.
Okay, but sir, any logical reason for just stopping the inflow for the client? Because every broker out there is kind of acquiring customer like anything, and we are following reverse strategy. So
losing 80% of the customers they acquire. You have to remember that acquisition is a very meaningless metric. We have to look at, ultimately, the thing that matters is whether we can curate that customer over a long period of time. So we want to make sure that when we scale, we have the right engagement story for the customers over a period of time. And for that, there has to be proper digitization of our journeys. In terms of digitization, up until last year, we were not amongst the top brokers at all, the top digital brokers. Whereas now, our first objective is to get to that stage. Only then, all these things can be worked on, acquiring more customers and scaling. And if you take an example, if you look from July or August, we were doing roughly only 25,000 accounts per month. And now we are doing, we are touching almost 80,000-90,000 accounts per month. So there has been a massive growth. And this growth I do expect to scale, but there will be both cost and it will take a little bit of time for the revenue to materialize, because there is a lead time of a quarter or so before the clients come in and start trading and things like that,
So, so can you expect something around roughly 1 lakh or some ballpark figure for the monthly addition for the client, for the active side of the investors or the traders?
We don't discuss those kind of details here. I can only give you the, you have the prior history. You have looked, you have the prior data that we always publish in the earnings call. You can work backwards from there, but we don't comment about our long-term strategy here.
Okay, as far as, sir, I remember, I think something around in June 22, we discussed over the figure that something around, 1 lakh addition is what we targeted, and then we reversed to the strategy and we stopped the client addition. So that was the context I was referring to. So any such kind of figure you like to, share with us?
No. As I told you, taking the number in isolation is not a very useful metric to look at this business.
Okay. That's it from my side. Thank you.
Thank you. Next question comes from Dhaval Gada from DSP. Please go ahead.
Thanks for the opportunity. Just a couple of questions. First is relating to the point on market share. So you talked about the digital strategy, getting the digital strategy right. You also talked about which is internal. The second point you mentioned was around competition being very aggressive on customer acquisition, and you chose to participate less in this market compared to your the opportunity that you wanted to capture. And lastly, you also talked about getting the right unit economics in place. Just trying to understand, about 2 or 3 quarters from now, do you think all of this will be in place for you to, sort of at a design level, start growing, quarter on quarter in a more, I would say, a more planned manner, even assuming competition is far more intense, etc.? Yeah. Or is there anything else that one needs to be cognizant of, that there can be some more delay or some other variable to sort out for?
Yeah, that's a very good question. So see, this is the main reason that in every quarter I give a very detailed product update, and a very detailed business update as well, because we talk about the underlying engine and the improvements we are doing both on product and tech as well as on the business side. So as you have observed, right, is that there is, our goal is in Q2, which is something I said in the earlier call last quarter. In Q2 of FY25, we are gearing up for a launch of our major product, and there's a lot of improvements planned before then, but that's where we plan on, launching our new services and new products, and this is something I have already mentioned in the earlier calls. So to that end, we want to gear up for that. So for the next 3 months, 4 months, regardless of what is the client acquisition in the market, whether whoever is, the top private players, whatever they acquire is not very much meaningful to me, because we believe that there is enough growth in the market. We are barely sitting at a 4% market penetration. Even if they win the whole race within the next 2 years, that is not to say that they're going to be around in 5 years from now. Because 5 years ago or 10 years back, there was the market, the entire landscape was different, and now it's very different. So it's going to continue to change. So it's very important that we build that playbook. So our major launches are coming up in the coming quarters, which is why we give detailed product updates. And also, as I said, if you look at our marketing engine, in my very first earnings call, I had said that we are going to scale, right? And at that time, we didn't give any indication. But you can see that we have scaled from 25,000 to now ending at about 90,000, right? So I expect us to follow that trajectory. Now, sometimes it may not be as steep. If we hit snags along the way, if we realize that the product development is not moving as fast, then we will scale. We will descale accordingly. It's very critical for us to not scale for the heck of scaling.
This is very useful. Just one follow-up to this and to understand it better is, let's say, by August, September or October, whenever the new stack is in place, the new design is in place. Do you expect it to, sort of, go exponential from where you were, let's say, before this planned deceleration that you talked about, and therefore, you're sort of building your platform and your stack, everything in place for a much bigger journey compared to, where you were, let's say, 4 quarters back. Would that be fair? It should be comparable to what the top 3 or 4 players are doing right now in the market. Is that fair, or there's still some more thing to be done even beyond that, which may take another few quarters or years? I mean, just how should we?
No, it won't take beyond that. It won't take beyond that. It is exactly what you outlined. See, and to give you some sense of our track record, when I joined the company in June, our incremental market share and acquisitions, they stood hardly at 25,000 accounts, something like 1%. Obviously we have doubled that while keeping our health metrics relatively constant. So this gives you some sense of what kind of North Star we are looking at. So what we have realized is that, and I have run a couple of other broking firms as well, so I can give from my own experience, that it is extremely critical to not to scale only when the digital infrastructure is actually ready. Otherwise, success can mask a lot of the other inefficiencies digitally. So, and it won't be scalable. So for us, it is very important because we've just started the digitization journey. And it is very important to keep continuing to build that and to scale only in accordance with that, to support future growth. So this is how we see it. But as you rightly said, it will take around Q2 as we go ahead and launch that and then beyond. Yes.
Understood. Very useful. So just one last thing, on the unit economics. And this somewhat relates to the point that you mentioned about previous organizations. So obviously they have a sort of significant head start and sort of a strong cash flow at this point of time, which helps them slightly be more generous in new acquisition, etc. So and from where you start this journey, do you see that this unit economics, the ideal unit economics, to be different for this company, especially in the first few years of the journey, let's say FY2025-26, and thereafter, somewhat stabilize to where some of the other leading players are, or we think there is something out there which they are not tapping in the right way, and which you'll be able to optimize in much better fashion. Just some thoughts around how one should think about more next 2-3 year unit economics and then beyond.
Yeah. See, we can only comment about our business. So I'll tell you that first of all, see, our business is very different than some others. Okay. We are not, we don't have any B2B business or anything like that. Okay. So we are not showing any, our RPCs and our customer metrics are completely digital, both sourced and serviced and also operated off. We don't have any kind of a B2B model in place. Secondly, unlike some of the other privately held brokers, we don't have a focus on mutual fund or anything of that sort. And I don't even believe that those journeys are very meaningful for our product. So from the get-go, the way we think about the way I'm thinking about the business here is that we really want to get the core journeys correct, and we want to focus on exclusively fully digitally engaged and fully driven by the product experience to launch more features in the coming quarters. And I believe that as far as your question on unit economics is concerned, you can do the math with, everybody's number is, at least some numbers are public, and now even Zerodha's numbers are public, so we don't want to talk about them, but basically everybody's publishing the numbers in some shape or form. And you can see that everyone's RPC is down. There is not a single one who has been able to keep the RPC at the same growth rate that they saw even a year and a half ago. So that tells you that the quality and the deceleration has been much more rapid than the acquisition rate. So it's very important that we do a very critical signal-to-noise test before we acquire. This is why, unlike any strategy I've executed in the past, in 5paisa, the focus is very much on that. And that is how we are looking at growth. So I believe that's the only way to responsibly grow from here on out. And as far as the lead time to catch up with other brokers and all is concerned, see, the simple thing is that these kind of, with the right capital infusion, anybody can catch up with anybody in no time. And you have seen the example, where a privately listed broker went from nowhere to number 2, number 2 or number 3 last year, right? And that privately held broker really was not able to scale. So I think those kind of metrics are not very meaningful. The key is, can you build that stickiness on the platform and the right digital engine?
Got it. Very useful, and wish you all the very best.
Thank you.
Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Our next question comes from Nagaraj Chandrasekhar from Emerge Capital. Please go ahead.
Hi, thank you. You answered most of my questions. Just I wanted some clarity on note 5 in the notes to accounts. There is a reversal of around 7 crores, which is taken as an expense this quarter. What exactly is this, and why has it been reversed?
Actually, that has marked not for this quarter. That has marked for the previous year. Because we have to give the comparison. December and December 22 and in complete financial year, we have done a reversal of 7 crore rupees. This was in line with SEBI circular that you need to reverse the upfront margin penalty which we have charged from the customers, and this is in the same line which they have given instruction to every broker. So every broker has done that, and we have also done that.
But it's a non-cash expense that's relevant to a prior year that's taken this quarter, right?
It's actually, the question is pertaining to last year. First of all, it is nothing. There is nothing related to for this current year. The second is it was not expenses. It is an income which brokers has recorded in an earlier period, and after the SEBI involvement, they had to reverse it.
Okay, so your cash expenses are broadly flat QOQ. Your actual cash expenses, if you remove this one-off, at around 43 crores. They've not changed much, but your customer additions have gone up significantly to this 80,000 a month cadence. So you mentioned earlier in the call, you said the industry is pretty commoditized, but you're at this cadence of 80,000 a month now. Do you think will be profitable clients for you? Will trade often with you going forward? Just any further clarity on what you are doing specifically to make them come to you, what you are doing, product or margin or other incentive wise to come with them to trade with us. Where else they're trading, who else are they trading with, and why exactly they're coming to us? Who are they coming to us from? Any sort of color without any, whatever you can divulge given comparative.
Your voice is not proper audible. Can you, remove, if you are speaking with your earphone and something else, so can you change that because it's not proper audible?
Hello?
Hello? Yes.
Hello?
Yeah.
So I just want to understand the clients that we have started adding now, and we say we will ramp this up. We said they're going to be profitable. So why exactly are they coming to us? What are we doing, product or incentives on margins and otherwise that are making them come to us? Yeah. And who are they coming to us from mostly?
Yeah, the market acquisition, we have obviously multi-pronged strategy. Some of them have come, a lot of customers come to us from other brokers where they're not getting quality of service or better product experience. And some of them come from new client acquisitions. We really don't discern at that level. For us, it's important that, as the product experience has gotten much better, our app rating, for example, has dramatically improved. right? So, and the core journeys have improved. So we see organically, we see people coming, and obviously from our own efforts as well, that is showing a lot of that is driving a lot of inbound traffic. Other than that, I think the other features which which you described, they are we think like those are table stakes for us to execute the business. That's not really a core. There's no core value proposition there.
Understood. Just one more balance sheet clarification on the free cash. Can you give a sense on the September cash we had on balance sheet, how that translates to free cash for us? How much is margin, how much is client margin, how much is free cash? Just wanted a further clarity on that.
So approximately, that we have a 500 crore net worth, and out of that, approximately 420 is a liquid net worth. And another thing, we have a margin in exchange approximately 1,700-1,800 crore. And now with the SEBI circular and the rules that every client money is with the exchanges, and apart from that, we have also kept a margin in FD form.
Okay. So your free cash, including the margin, is 70-80 crores, or is it more?
No, it's a 70-80 crore. Yes, it's a 70-80 crore, but actually you can't say it's a free cash. It's a cash which you may require at any point of a time. If the market is volatile, then you need to give to the exchanges for the margin purpose. So not exactly it's a free cash. It is a safety cash which we have, a safety margin cash which we have, so that in volatile market we can put more in exchanges.
Okay.
Thank you. We have a follow-up question from Dhaval Gada from DSP. Please go ahead.
Yeah, thanks again. So just a couple of other questions. One relating to the acquisition of clients from IIFL Securities. What's the update on that? And also on a steady state basis for next year, what should one think about from an employee cost perspective? If you could give some clarity, excluding the ESOP costs. I know that that's a variable. But just outside of that, what's the more stable number to look at?
Yeah. So I think for the first one, the discussions are on with the regulators, and once we don't have any further update really to report on that. Once we hear back, we will be obviously announcing. So the discussions are on, and okay. I expect it to take a little bit more time. Right. Now regarding the costing. See, as I mentioned, right, we have most of the cost for employee growth, in the sense the team size, the team calibration. I would say we are pretty well staffed. We are pretty well, actually staffed up from a human capital point of view, especially on engineering and product, and that's been the focus. Now, there may be expenses on the other teams, like call center, sales, whatnot. But those I expect to be very much in line with our growth. And I expect, more importantly, I expect those to only grow with revenue. I don't expect too much of an upfront hit. Now, ESOP, as you very rightly pointed out, we have not taken any ESOP cost at all so far. And we expect to take that sometime, obviously in the coming quarter or so. Because that's something that is a part of our long-term plan for incentivization of employees, But that typically, as a company, we only do that once a year. Historically, we have done it only once a year, and at the March-April time frame,
So just to be clear on the ESOP costs, that would likely come in first half of next year in a meaningful way, and then get spread over the following years in a more normal way. So there will be a large cost, non-cash cost, which can come in the first half of next financial year.
Yes. That's the way, that India works.
Put up juice in you heard the answer?
Okay, no, I missed it, sorry.
No, you are right, absolutely right, which you are saying, because that's the way that India works. Most of the cost comes in first year, and then it's followed by the second and third year.
So yes, we will see the cost in the either in Q4 of this quarter or in most likely in Q1, but there could be some in Q4 also, but not beyond that, and the rest will get split over subsequent years, as Gaurav was mentioning.
Got it. Thank you.
Thank you. Our next question comes from Thinnai Nema from Ravian Capital. Please go ahead.
Hi, sir. So thank you for taking my question. As you said that you are only interested in acquiring high-quality customers, the ones that stick around. So could you help us understand who exactly are, the high-quality customers? Is the stickiness determined by the kind of services they avail? For example, is it that the F&O trading customers are more volatile than the ones who simply invest in equities? Any color on client profiling or any trends that you see?
Yeah, I mean, this is very sensitive to our core product, to our core business strategies. So obviously, we cannot comment on this. But I'll just give you some broad guidelines, right? I mean, as we have seen, there are a lot of new entrants in the market. Most of them are F&O players. Most of them come in and they experiment with it. 90% of them will leave the system, and from the ones who are left, they will rise up the food chain and they eventually give more RPC than everybody else. That's typically the client profile and behavior. And there are many strategies to retain customers. One of them is obviously you pursue a super app strategy. The other one is the way the private players are going about it, where you build like a good portfolio of alternate adjacencies. Just as, the GrowX has an excellent mutual fund business, right? So you kind of build off something like that and go. But for us, we are not looking at any of those clients because we believe that the audience we are after and the market we want to curate is really exclusively for traders and F&O customers. So for them, we believe that there's a different playbook that has to be thought out. And that market is actually nobody has a handle on that market today. Neither of the top 4 players. So that is something that we have to work on actively.
Got it, sir. Thank you so much.
Thank you. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. There are no further questions. Now I hand over the floor to Narayan Gangadhar for closing comments.
Thank you very much for joining our quarterly earnings call. We look forward to meeting you all again next quarter and keeping you abreast on the progress. If you have any further questions, please email ir@5paisa.com. Have a wonderful rest of the day. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference call for today. Thank you for your participation and for using Doorsaba's conference call service. You may all disconnect your lines now. Thank you and have a pleasant evening.